Fed to unveil any other large charge hike as symptoms of financial slowdown grow. Washington, with the Federal Reserve anticipated to hike its key hobby charge by using 0.75% factor on Wednesday to war excessive inflation, cognizance will shift to how deeply signs and symptoms of a monetary slowdown have registered with its policymakers. The anticipated boom in the goal federal budget rate, the Fed's key tool in trying to lower inflation from a 4-decade excessive, will deliver the U.S. primary financial institution to a mile marker of sorts as it reaches a degree of around 2.4%. This is anticipated to no longer encourage monetary interest. That will constitute one of the fastest ever gear adjustments in U.S. financial coverage. Just over 4 months ago, the policy rate turned into near zero and the Fed changed into shopping for billions of dollars of bonds every month to help the economy recover from the COVID-19 pandemic. A speedy ride to neutral, but at the same time as there has been little progress registered yet within the inflation combat, signs and symptoms of financial strain are amassing and raising the stakes for Fed officers as they weigh just how a good deal tighter monetary policy desires to be to slow charge increases in opposition to the risk that going too a ways ought to cause a recession. Even ahead of this week's two-day coverage assembly, the inflation trouble turned into taken into consideration so dire that buyers placed about a 1 in 4 hazard the Fed could marvel markets with a bigger 1 percentage point growth in its benchmark overnight interest fee, paying homage to the hikes used within the early 80s by way of then Fed Chair Paul Volcker. As the Fed's effect at the financial system turns into more obvious, the problem now's whether it's far prone to overdoing it. Parts of the U.S. bond market are signaling an multiplied likelihood of recession, with yields on 2-year U.S. Treasury notes now higher than they are for 10-year Treasuries, a probable sign of lost religion in near-term economic boom and reflecting a possibility the Fed can be forced to cut prices inside a fantastically short span of time. Fears of a stalling financial system were stoked overdue on Monday whilst Walmart NYSE, WMT, Inc., whose large footprint offers a wide view of purchaser behavior, reduced its income outlook and mentioned inflation had pressed shoppers to spend their cash on meals and gas in preference to higher-margin discretionary objects like electronics and clothing. General Motors Company NYSE, GM, for its element, said it had eased hiring and delayed planned spending in reaction to inflation and to hedge in opposition to a likely broader slowdown. The U.S. Commerce Department is expected on Thursday to record that gross domestic product grew at a turgid tempo within the second region. New employment facts scheduled to be released next week will show whether strong activity introduction, taken into consideration an important energy of the U.S. financial system right now, continued in July. Conflicting data Fed policymakers will not problem new monetary projections of their very own on Wednesday. But a new coverage assertion because of be released at 2 p.m. Eastern Daylight Saving Time 1800 GMT, and Fed Chair Jerome Powell's information convention 1/2 an hour later ought to intricate on how the imperative financial institution perspectives the recent monetary information and as a minimum trace at its subsequent steps. That will almost truly encompass some other hobby charge growth at the Fed's next policy meeting in September, with upcoming inflation information likely to form whether or not officials opt for some other 75 basis point growth, or cut back to a 0.5 percentage point circulate. With patron expenses rising at a extra than a 9% annual fee as of June, the Fed will now not gradual the pace of hikes till they may be convinced inflation has grew to become. Ian Shepherdson, leader economist at Pantheon Macroeconomics, wrote these days. A variety of Fed officials at diverse points because the begin of the year have stated they concept inflation had peaked, solely to be stuck out as expenditures endured to rise faster.